China's economic landscape, once a beacon of unyielding growth, now faces a formidable challenge. A deepening property crisis that has drawn ominous comparisons to the 2008 collapse of Lehman Brothers. This looming spectre of financial instability, emanating from the very foundations of China's economic engine, has sent shockwaves across global markets, raising concerns of a contagion that could cripple the world economy. At the heart of this crisis lies the spectacular fall of Evergrande, China's second-largest property developer, a tale of ambition, debt, and the perils of an overheated real estate market. The Evergrande debacle, far from an isolated incident, has exposed the systemic vulnerabilities of China's growth model, one heavily reliant on real estate investment. As the government grapples with the crisis, deploying a combination of targeted measures and cautious optimism, the long-term implications remain uncertain. Will China manage to navigate this treacherous terrain and avert a full-blown financial meltdown? Or will the bursting of its property bubble trigger a global economic earthquake? The answers to these questions hold profound implications for China's future and the world at large. Evergrande's journey, from its humble beginnings to its meteoric rise as a property giant, epitomizes the rapid urbanization and economic transformation that China witnessed in recent decades. Founded in 1996, the company rode the wave of China's burgeoning middle class and its insatiable appetite for property, fueled by readily available credit and a government policy encouraging home ownership. Evergrande embarked on an ambitious expansion spree, transforming itself from a regional player into a national behemoth. Evergrande's reach extended far beyond residential real estate. It ventured into a dizzying array of industries, acquiring businesses in sectors as diverse as electric vehicles, healthcare, and even theme parks. This aggressive diversification, while seemingly indicative of the company's dynamism, masked a riskier strategy, leveraging debt to fuel its relentless expansion. As Evergrande's empire grew, so too did its mountain of liabilities, setting the stage for a spectacular fall from grace. The year 2020 marked a turning point for China's property market. Concerned about the sector's ballooning debt and its potential to destabilize the financial system, Beijing introduced the 3 Red Lines policy. This set of stringent financial regulations aimed to rein in the excessive borrowing that had become endemic in the industry. The new rules imposed limits on developers' debt-to-asset ratios, equity-to-asset ratios, and cash-to-short-term debt ratios. For Evergrande, heavily reliant on debt to fund its operations, the 3 Red Lines policy proved to be a major blow. The company, already grappling with cash flow issues, found its access to credit significantly curtailed. As the government tightened the screws on lending, Evergrande's financial precariousness became increasingly apparent. The writing was on the wall. The once unstoppable property giant was headed for a reckoning. The year 2021 witnessed Evergrande's descent from a symbol of China's economic might to a cautionary tale of unfettered ambition and financial overreach. The company, burdened by a staggering $300 billion in liabilities, began to falter under the weight of its debt. It missed payments to bondholders, halted construction projects, and saw its stock price plummet. The once unthinkable was happening. Evergrande, a titan of China's property market, was on the brink of collapse. The Evergrande crisis quickly escalated into a full-blown contagion, spreading fear and uncertainty throughout China's property sector. Other major developers, including Country Garden and Vanke, found themselves facing similar liquidity challenges. The domino effect continued down the chain, impacting suppliers, investors, and homeowners. As the crisis deepened, it became clear that Evergrande's collapse was not an isolated incident, but a symptom of a much larger systemic problem. The Chinese property market, once a seemingly unstoppable engine of growth, was now teetering on the edge of a precipice. Section 5. Spectral Skylines, China's Ghost Cities. The Evergrande crisis brought to light a phenomenon that had been simmering beneath the surface of China's economic miracle. The emergence of ghost cities, these sprawling urban developments, characterized by rows upon rows of empty apartment buildings, stand as eerie monuments to the excesses of China's investment-driven growth model. Built on speculation and fueled by easy credit, these ghost cities represent billions of dollars of wasted investment. The existence of ghost cities highlights the deep-rooted imbalances in China's economy. For years, the country has relied heavily on investment, particularly in real estate and infrastructure, to drive its growth. This model, while successful in generating rapid economic expansion, has led to overcapacity and speculative bubbles. The property sector, accounting for a significant portion of China's GDP, became a key driver of this investment-led growth, resulting in an oversupply of housing that far outstripped demand. Section 6. Ripples beyond the wall. Global repercussions. The impact of China's property crisis extends far beyond its borders, sending tremors through the global financial system. International investors, lured by the promise of high returns, had poured billions into Chinese property developers, including Evergrande. As the crisis unfolded, many of these investors found themselves staring at substantial losses. The Evergrande saga serves as a potent reminder of the interconnectedness of the global economy. The crisis has exposed the vulnerability of global supply chains, as the construction slowdown in China ripples through industries worldwide. The potential for financial contagion, with failing Chinese companies triggering a cascade of defaults across the globe, has raised alarm bells in financial capitals from New York to London. Section 7. Beijing's Balancing Act, Intervention and its Limits. As the Evergrande crisis threatened to spiral out of control, the Chinese government, known for its tight grip on the economy, faced a delicate balancing act. On one hand, it had to intervene to prevent a systemic collapse that could cripple the financial system and send shockwaves through the global economy. On the other hand, Beijing was wary of being seen as bailing out a company deemed to have overreached, setting a dangerous precedent for other debt-laden firms. The government's response has been a mix of targeted measures and cautious restraint. It has eased credit restrictions for some developers, injected liquidity into the banking system, and proposed the creation of a bad bank to absorb distressed assets. However, Beijing has also made it clear that it will not orchestrate a full-blown bailout of Evergrande. The government's approach reflects a delicate balancing act, a attempting to stabilize the market without encouraging reckless behavior in the future. Section 8. Echoes of 2008. Drawing parallels and distinctions. The Evergrande crisis has inevitably drawn comparisons to the 2008 global financial crisis, triggered by the collapse of Lehman Brothers. Both events involved the implosion of debt-laden institutions, exposed the fragility of the financial system, and raised fears of a global economic meltdown. However, there are also crucial differences between the two crises, particularly in terms of the role of the government. In 2008, the US government initially hesitated to intervene, allowing Lehman Brothers to fail, a decision that exacerbated the crisis. In contrast, the Chinese government, with its tight control over the financial system and a vast arsenal of policy tools, has taken a more proactive approach, intervening to contain the fallout from the Evergrande crisis. Whether these measures will be sufficient to avert a full-blown financial meltdown remains to be seen. Section 9. Charting the course ahead. Recovery or ruin. The long-term outlook for China's property market, and indeed its economy as a whole, remains shrouded in uncertainty. The Evergrande crisis has exposed the unsustainability of China's investment-driven growth model, highlighting the need for structural reforms and a shift towards a more sustainable and balanced economy. The path ahead is fraught with challenges. The Chinese government faces the daunting task of deflating the property bubble without triggering a sharp economic downturn. It must address the issue of ghost cities and overcapacity in the construction sector while finding new engines of growth to drive the economy. The road to recovery will be long and arduous, requiring a delicate balancing act and a willingness to embrace fundamental change. The world watches, waiting to see if China can navigate this treacherous terrain and emerge from the shadow of its property crisis stronger and more resilient.